Good evening, everybody. A cold evening here in Pittsburgh, but at least sunshine today. Raj, if everybody that paid for the session should have gotten the link sent out to them today. Okay. Whoops, I don't even know what screen I'm on. Yep, I'm on the wrong screen. Okay, we haven't seen a divergence in the markets this dramatic, or I can't remember, in the last quite a few years where we saw such a divergence. At one point today, the Dow was up over 600 points. But at the same time, the NASDAQ was down 150 or 200 points. That's usually not the norm. I mean, if one is up, maybe the other one would be down slightly or vice versa. But to have them strong in one direction or opposite directions, and so here's the thing I want to stress, that on Friday, even though we had a strong bullish day in the market, the one thing that kept the little red flag up was the fact that this was not a signal. And that alone, look at what happened over here, same scenario. So the logic has to be, all right, this was because they finally passed the stimulus package. Well, unfortunately, when you're dealing with our representatives in Washington, whatever they pass may not necessarily be the best thing at the time. I say at the time. Didn't they start working on this stimulus bill back in September to get it out to the needy people? And and there was apparently a large amount of money going elsewhere that would not necessarily be part of a stimulus package. Yeah, that was not necessarily a true sell signal just because, I can't tell. It looked like it opened slightly lower, but it's probably close enough to say there was the last gas buying before they started selling off hard. That usually starts a downtrend. Now, had this been a bearish engulfing signal, and I can't really tell. Whoops, that didn't do anything. So it's not quite a bearish engulfing signal, but it still kind of signified there was going to be a change of investor sentiment. But just like this not being a strong bullish signal, this was not a compelling selling signal. So that's why we're still kind of in a junky trading range. But here's what I'm really trying to point out. The fact that even though they bounced up strong, they started selling off this afternoon after they'd gone through this level. If they had stayed above this level, that would have been a much more revealing facet of the bullish sentiment. This may just be this toppy bounce. And on top of that, the fact that the NASDAQ didn't really show any strength. At one point today, it was up about $60, but it didn't help. Yeah, do that. In your years, have you ever experienced a market like this? Jace, probably. I just don't remember. I have a hard time remembering last week, let alone years ago. this was, again, very telling that this Barry's J-hook pattern, trading below the T-line, and still not quite gotten down into the oversold area. Yeah, that was unusual to see the NASDAQ sell off this hard and the Dow up that hard. So let's take a look at a few that we were looking at. Fizz had a nice fry pan bottom pattern. That's right. Can we follow where the money is going? Yes, we can still follow where the money is going. We'll get to that here in a second. And that's relatively easy when we're using candlestick signals. But we can see on Fizz that it really didn't move anywhere today. Doesn't make it a bad signal. It's still got kind of a fry pan bottom, cradle type pattern. Still want to be a buyer of this, especially if it comes back up through today's open. But here's the money maker. This one. After buying down here at around the 290 level, closed today at 1177. And so that was still a very strong signal today, or strong pattern. I have no idea where this could go to. But now, maybe it's not the best place if you could get something that had a lot less, pshaw. Take a look at, I can't pull them up here. Look at EYESW, which is the warrants. They're trading around, they were as high as 3 today. That might be a better way to play it with a lot less money exposed. But anyways, just to point out that obviously about 400, 500% profit on this. So this is what improves the probabilities of being in the right place at the right time. It's just recognizing the patterns and, in this case, yes, Mike, the warrants. Warrants is like a long-term option. It says that if you own the warrants, you own a piece of paper that allows you to buy the stock. And I think we discovered that in the room today, that it was for March or April of 2024. So 3 years down the road. So it's like a long-term option. So that piece of paper that says you can buy the stock for $11.87 3 years down the road was trading for around 3. So you can see where the leverage comes in. But so again, when you get a few of these, I mean, if you could get one of these every 3 months, the warrants have time decay. Oh, they do, but it probably isn't relevant. Time decay is more, I want to say, more observable if you've only got 3 weeks to expiration. If you got 3 years to expiration, the price of the warrant is probably not going to be affected as much. Yeah, so yeah, I can't get it up on this system, but it's EYESW. I wouldn't think so. Yeah, I don't think it's but I'm not sure on that. And I probably wouldn't worry about it. If I was buying the options and the stock has another 7-point move, and the options go from or the warrants go from 3 to 9, I'll probably sell them. So, all right, thank you, Bill. Wouldn't warrant move much less drastic than a 1-month call option? Yeah, but it's going to go correspondingly. The warrants are so that you can buy the stock at 1170 or 1187. I think somebody put up the number, and the warrants right now are trading around 3 after hours, anyways. So, and we're not looking at right now this to have a very slow uptrend. This might be in the phase of, if I can make this small enough. Guess I can't. Get closer. So one time it was trading up here. Ooh, trading up here, trading up here. Well, yep, trading up here at one time. So if I've got a warrant that I can buy for $3, and I think over the next 2 months, it might go from this level to 25. It's just a better way to get some leverage. SP, we bought it. We announced it, I think, both in here and the options room. No, mostly in here, didn't we? That we were buying eyes at $2.90. Oh, is it exercisable? That I don't know. I'm pretty sure it is. If you have a piece of paper that says you're allowed to buy that stock at $11.80, I think all you have to do is turn that in, and yeah, they have to honor it. So I don't think it's callable, meaning I don't think they can call you up and say you have to exercise your warrants, but you can exercise your warrants whenever you want to. All right, so let's get off that. The important factor is well, Mike, that's the whole point of mentioning the warrants, that this might be a high-risk trade. So maybe the warrants are a better way to do it, where if you're buying it for $2.60 to $3, that if all of a sudden this turned around, you might lose $6-7 on, let's say $4 on this pulling back hard, whereas you might only lose $1 on the warrants. All right, so, but anyways, this was to illustrate SP. I think we did. Does anybody remember? I can't push that far back. Does anybody remember? Yeah, people must have remembered because a lot of people were buying it at that level when we mentioned it. I meant what level? $2.90. You're waiting for the coming Jayhawk. All right. Okay. So anyways, this is mostly to not say, hey, we got a great trade. It's to say, if we can see or recognize a signal setting up, like the kicker signal, what's our next step? We go to our rare process. We immediately see what the news was that created that signal. And apparently the FDA approved some of their process for helping the blind recover their sight. So when you look at that news, you ask yourself, all right, is that something that's going to continue to move this stock price? But that sounded pretty significant. On something like this, where the stock price skyrocketed today, this was GLSI, when you went back and researched, all it really meant was that all they really reported is that they hired some new executives for top management. When I got to eyes this morning, finish, it was already north of 12. At what point on the 10-minute chart when open a position? Or would it be too late? Well, let's see. Let me finish this. If they announced that they hired new executives away from other companies to be executives of this company, got to ask, well, does that really warrant this stock going from 23 to 55 or so? Or is that just a bounce? So, yes, that's the process you want to use, is when you looked at it and it gapped up, are they gapping it up and selling it off? That's where you have to go to your 10-minute chart. Say, oops, that was yesterday. You could be buying, wouldn't be buying here. Might be buying here, wouldn't be buying here. So once the initial move was occurring, probably wouldn't really be buying, wouldn't be selling it, because there was a scary part during the day where it came back out, or came back almost to where it opened. And it may have hit some stops right there and then started back up. Now, what did this tell us going into the close? Even though it wasn't near the high of the day, it went up to 1483. Even though it wasn't near the high of the day, they were still buying going into the close. So it wasn't like everybody was bailing out. So anyways, this is more to illustrate that when we see a signal or pattern that gives us a high probability situation, go and take a look at what the news is. And that's what I've been asking every time when something's moving big. I'll usually put a comment in the chat room that says, is there any news on this? Now, if there's no news, you got to be a little bit more, I guess, a little bit more attentive to what the 10-minute chart is telling you, so that you're not in just some short squeeze, quick bounce, and then they sell it off again. So using the signals or patterns is much more effective. If I can do this, but if you could just, there's kind of a wedge pattern setting up, and they've broken out to the top of this wedge. And look at the signal that broke out through the wedge. There's your best friend breakout. So what's that tell us? It just tells us the probabilities are pretty strong. This could be heading higher. Now, they're reporting earnings after the close on Wednesday, but probably on AMC, there's not going to be not going to be affected by earnings. Everybody knows what the earnings are probably like. They haven't had any theaters open. So what's moving this one? Probably the short squeeze that GameStop was involved with. Yes, the what do they call it? Reddit. So that's probably got more significance of why it's moving versus just a earnings expectation. Yeah, they were in this one, that one earlier this year, like GameStop. Okay, so where am I now? AS, oh, we got all these lines all over. Look where this is kind of that power trade setup. How many things can we see happening here? The Candlesticks coming up out of the oversold area, long-legged doji, bounce off the 50, bullish confirmation. Start watching to see if they can break this downtrend, giving you the probabilities of it heading higher. The oil stocks continued to move well, even though crude oil itself was kind of backing and filling today. Whoops, I was wrong. Well, it's up 17 cents now. So what do we got going on? There's the J-hook pattern. That kind of implies crude oil may even still be going higher. CVI, trying to do a J-hook pattern. All right, okay, thank you, Ray. Other oils. MNRL didn't really execute today. If you bought this and it closed back here, you've got a couple things to take into consideration. One, maybe it failed here with a dark cloud, but we're not in the overbought area. And what started this J-hook pattern? There's our inverted hammer, morning star signal, bounce on an obvious support level, this case a 34 EMA. The morning star signal followed by a doji sandwich, your McMuffin, J-hook pattern. If you bought this today, wouldn't be real concerned. Definitely would like to see it open positive and start trading positive, but you've got a lot of bullish sentiment being illustrated in the chart. Earth, kind of the same scenario. Call the doji sitting right here on the T-line, bullish confirmation. I'd still be a buyer of this one if it comes back up through today's open. An AMCX is a good illustration of why you wait to see if it closes below the T-line. If it had closed down here, that would have been a bad chart. The fact that they bounced back up off the T-line area pretty much told us what we would expect. There's our fry pan bottom. Now there's kind of a J-hook pattern. So the reason we want to learn the patterns is twofold. One, because it's a high probability directional analysis. And two, the magnitude of the return is usually going to be much greater than just merely a uptrending stock in an uptrending market. It does have a left-right combo. But where are we most concerned about a left-right combo? In the overbought or oversold condition. So you have that to take into consideration. It is a left-right combo. It did it right here, but it still closed above the 3T line. The Candlesticks aren't in the oversold or overbought area, and you came off a morning star signal with an inverted hammer. So you've got as much positive analysis as you do the left-right combo. So this makes it fairly simple. If they start trading this one lower as well as the other oils lower tomorrow, close out the position. So it just gives you insight as to what you should do on your next on the next trade. Okay. few that we have on the watch list. QS, after that hammer signal in the oversold area, trading positive today. Not a real powerful reversal signal, so why would we have it on our watch list? What other elements can we visually recognize to tell us this might be the area that they're buying? They're doing it right at the same level they started buying over here. Left right combo, confused as why you showed that. Oh, because I think we recommended this one a few days ago down here. So now it's a question, do you stay long or do you get ready to close it out? Or if you're thinking of going long on this one, wait for it to come back up through this level. I guess I could make this bigger yet. So here's the things that you have to take into consideration when you take that quick glance at your chart. Is there a pattern, J-hook pattern? Are the stochastics in the overbought or oversold area? Is there a hard sell signal here? A left-right combo that tells you, well, we might want to put up the little yellow flag anyways, but it's still closed at the 3T line. And what's the other aspect that we want to include in this analysis? It's an oil stock. What are the other oil stocks doing? Apache heading up. Whoops. Whoops, Occidental did sell off today, but still above the T line. EOG looks like a J-hook. So that's to say, if the rest of the industry was selling off hard and this one did this, then maybe I'm getting more ready to close out the position if the whole industry or the whole sector is selling off. So that's, as I look at this chart real quickly, I got a J-hook pattern. I do have a possible sell signal. I'm still in an uptrend. I'm still above the 3T line, and it seems like the other oils are holding up. I'm going to watch to see what this does tomorrow to see whether I need to close out that position. What's the possible sell signal? That if it opens lower, starts trading lower, now your left-right combo is confirming at this level. So if it opened in here and waffled around, you can still stay long. If it starts selling off, or we wake up and we find that the crude oil prices, these are all things you can put into your analysis. Crude oil looks like it's trading up a little bit after hours, but if it all of a sudden we wake up tomorrow morning and crude oil is sold off $2 and the oils are selling off, yes, that's a good reason to sell that CVI because of the left-right combo and then weakness afterwards. Okay, so the big money makers is here is that's not big money. This is kind of an illustration. The day when this was trading positive, it was giving you a Morning Star type signal. But when it closed right here, what'd that tell you about the strength of this possible reversal? It's not there. What's the other thing that we should be watching for at this point? Well, your stochastics aren't anywhere close to being oversold. And if this opened lower and started trading lower, what would this be? This would be a bearish double doji that failed at the at the T-line, right? That means you probably should be more apt to get ready to go short on this. When do you use the 3 T-line as opposed to the T-line? You're using it just to make an evaluation. And a simple evaluation is if they haven't closed below the T-line just yet, or I'm sorry, the 3 T-line, obviously they haven't closed below the T-line. However, we've got a sell signal closing right on the 3 T-line. So we use that and say, all right, haven't closed below the 3 T-line, let alone the T-line. However, if it opens lower and starts trading down below the 3 T-line, where's the next target? Right back to the T-line. Now, is that anything real devastating? Not necessarily, but what does that do to your pattern? Tells you we probably have a double top versus a J-hook pattern. Let's close out the position. With crude or U.S. dollar hard rally, crude oil and other currencies must look like it's exploding. Whether there aren't inflow of investment funds in the U.S., this might be why the Dow 30 is rallying so far. All that inflow is not going into just treasury bonds. Okay. Oh, on CRTO, well, the other side of that coin is whatever it did years ago may not have anything to do with what it's doing today. So if I was thinking about buying this one, I would definitely have to see positive trading and close above the T-line. If it opens lower, now we've got what we can recognize as a bearish double doji. That might be a good time to be going short. All right, so when things close below the T-line, this is where you kind of just use common sense. That if the NASDAQ was trading below the T-line and you have individual stocks starting to trade below the T-line, now your trading analysis becomes very simple. You just stay short until you see a buy signal to close above the T-line. Now, does that mean if you were short here, you might not have covered here? Yeah, you could have covered. But then when you got up here, put it this way. Oh, that's clever. All right, so what do we have here? We have a gap down in the oversold area. Where do most people sell? They panic sell at the bottom. That's where we start looking for buying. All right, so if we were short, we may have covered the short position. But as you analyze the market trend and saw that the NASDAQ was not trading up, and this did another bearish engulfing signal right here, now what can we kind of project? Just like we can project a bullish J-hook pattern, we can just as well project a bearish J-hook pattern. Now, is that a concern that we're down here in the oversold area? Remember, what happens to our patterns? They're usually going to occur at the extremes. So if this was a bearish J-hook pattern, what can you at least calculate as far as what your downside potential may be? Well, if that's wave one, wave three could probably take you down to the 200-day moving average. If you add further analysis to your trade, the blue ice failure, you can see exactly what happened up here at the resistance level. They failed and closed below the T-line. What did that tell us? Logically told us they aren't going up through the 50. They're still heading down. So on a blue ice failure, where's your next likely target? Down here at the 200-day moving average. So that made a lot of these short positions easy to hang on to. I say easy to hang on to. Today when the market, the Dow, was trading up big, and a lot of these stocks came up a little bit. What's this signal right here? A lot of people are going to say, well, that's a hammer signal. No, it's not quite a hammer signal because that tail is not 2 times greater than the body. That still kind of implies there's a little bit of weakness here. And what was the other aspect that we could analyze? Not only were we still trading below the T line, but they were having a hard time even getting up through the 3T line. Where do you think the next likely target is for Chewy? At least right here. So this is why I tell people, do as I say, not as I do, because just to be safe, when S-Fly was trading positive today after a doji hammer in the oversold area. It was trading up, and I'm thinking, all right, I better close out at least some of my short positions just to be safe. So I picked this one, but then you saw it didn't do anything that told us the downtrend had changed. Investor sentiment was still bearish because we were still below the T line. SLK opened positive and started trading a little bit positive. But the one thing that has taught me patience is the fact that until you see a definite change of investor sentiment, you've still got to use the T-line rule. The probabilities are pretty strong that you're still in a downtrend. And what additional factor do we have on this chart? The blue ice failure. We're trading below the T-line. We have a blue ice failure. Where should we anticipate they could possibly take this to? Back down to the 200. When the S&P went up big, it was difficult to stay in shorts. Yes. But the thing that kept VJ, I am calling it now the Delta Force patience. That I know, and I've done it so many times, that I've let myself get faked out because things happen to be bouncing in the wrong direction. And you sit there, or I sat there for many years thinking, oh man, maybe this is the time that I should be getting out because this could be the reversal. And I would say 95% of the time at the end of the day, I'm thinking, why did I let them scare me out? There was nothing on that chart that told me the bulls had taken control. It needed confirmation. Let's see. Oh, FLGT. FLGT, unfortunately, fits into the category of having a pretty tough decision-making process to try to stay with this one. When it gapped up because they had fantastic earnings, man, that took gut-wrenching to say, all right, what's it doing now? What's it doing? It's up $22 from the previous day. But as soon as you start seeing it turn red, at least you say, all right, I'm going to stay short until they come back up through the open. Jay, no, the Delta Force patients, and I might have the wrong group, but there was a movie years ago about a bridge somewhere in Europe that needed to be bombed, and the gorge was too narrow for planes to bomb it. But it was important that they got rid of that bridge, so they sent in with a Delta Force, which was 8 or 10 guys, and so their process was it the 10. No, that's not the bridge too far. So there was a dam further upriver in this gorge. And so their game plan was, oh, was that it? The bridge over Rama, then who was the, it's not the bridge over the River Kwai. Anyways, whatever, I call it the Delta Force because I think that's the same group in that group of movies. So there was about 8 of them, and they eventually made their way secretly to this dam. They snuck in, and they were going to blow the dam so that all the water would rush down the river and knock down the bridge. Yeah, Harrison Ford, I forget who else was in it. I should probably watch it again someday. So they went in, they snuck in. There was some German guards around, but they got past them. And they set the charges, but then the Germans found them. So half the, or the leader of the group and the engineer that set the charges headed out one side of the dam, and the rest of them headed out the other side. So they finally ended up on both sides of the gorge, which was too steep to get together. And then the explosions went off, and you could hear them. And then there was nothing. And the leader of the group, which happened to be on the side with the one engineer that set the explosions, looked at him and said, "We failed." And the engineer just sat there on a rock and said, "Just wait, just wait." And then it showed how little cracks started forming in the bottom of the dam, little water sprinkling through. Pretty soon, it blasted a hole through. All this water came out. The dam collapsed and went down and knocked the bridge over. But I can remember the scene where that the engineer said, just wait, be patient. So that's what I tell people as far as using the T-line. Be patient, because the probabilities are so strong that if you're below the better imagery than the movies they spurred. Okay. The statistical factor that as long as you're below the T-line, just wait until you see a buy signal. How do you tell which stocks can be shorted? Well, you're shorting the stock based upon the charts. It's not whether a stock can be shorted or not. All stocks can be shorted. Now, there's limitations to that. If you've got a brokerage firm and you're trying to short a very low volume stock, they may not have stock in their accounts throughout the firm to allow you to short it. But most stocks are shortable. And all you do is you sell it versus buy it. Because when you sell it, all the accounting stuff will show that it is that you don't own it, that you're going to be shorting it. Does the 45-degree apply? Pretty much, yes. But the main factor is you can stay short now as long as it stays below the T-line. So anyways, whatever the movie is, I call it the Force or the Delta Force, or is it Force 10? Just sit there and be patient. Remember, was it Bill Murray who was in Trading Places, where they were watching orange futures drop, and darn, I can't remember the black actor. Should we buy now? Should we buy now? And Eddie Murphy and who was Dan Aykroyd. That's it. Dan Aykroyd said, "Just wait, just wait, just wait." And then all of a sudden, he said, "All right, now you can start buying." And that's when things started reversing. So just wait, stay short. Trading Places, yes. Okay, so with that, anytime you see something that's going to tell us to go short, look at your hanging man on Fubo. What do we got going on? Wave 1, wave 2, gap down, wave 3. So right now, the impetus to be short is based upon the NASDAQ not able to get back up above where could be the possibility of a target, the 200. That seems extravagant. What happens at when things keep going down? At some point, everybody pulls a plug, and it could take one big day to get down there and bounce back up. Okay, so remember we started short in ARC. Uh-oh. Look at kind of your inverse cradle pattern and a close below the T line. How long would you stay short on this? Never could get back up above the T line. Maybe you would cover the short here, but that left-right combo right here at the T line told you they weren't going up. They were still heading down. And if they were heading down, what would that kind of imply? There's your bearish J-hook pattern setting up. So it just dramatically improves the probabilities that you're heading in a direction of the latest pattern. Anytime you see a bearish harami at the lower end of a previous day's trading, that's a warning. That's telling you the bears are in there. If after that, remember what happens after a doji or a bearish harami? If they open it lower, the probabilities are pretty strong. They're taking it down. That becomes a very good place to start shorting. So we recommended shorting here because it was not looking like it was supporting at this level. Telling us even with the, that we still had more downside. And let me see what else we got. Space. There was that bearish harami near the lower end of the range, traded lower the next day. How long do you stay short on this? Well, you're in the oversold area. You've got a hammer, an inverted hammer, but no buying yet. If I was short space, I'd have a safety stop just above today's high. Logic says if the buying starts here, that told us the 200-day moving average was acting as support. And where do you think it's going to move to? At least bouncing back up to test the T-line. Holy smokes. We're not even out of our own positions yet, let alone, and whose handwriting is that? So same scenario on Billy. Look at your kind of your double doji gap down, bearish best friend. I don't know what that line is. That's probably from a previous chart. But where's the possible target? Be all the way down here. What Tuesday session? I don't know what that means. So if we're looking for shorts now, we should be ideally looking for stocks not yet in the oversold area. Yes. So you want to be looking for something that looks like it's just starting down versus already had a pretty significant move. Or, well, here's another one that has not shown any buying. So this is why you always wait to the end of the day. That was a good looking reversal. Had it closed up here, you would have had kind of a morning star after a long-legged hammer signal. But that's why I always kind of wait to the end of the day to see what type of signal we have. Remember what the important criteria for the Japanese rice traders is, where things open and where things close. So there's your wave 1, wave 3 on CRUS. Took you right where you thought it would go to the 200-day moving average. Apple, probably going to the 200-day moving average. Amazon. Uh-oh. Notice what it did today. Had it closed up here, that would have been a nice reversal signal. Still heading down. So the biggies obviously are the ones getting battered here. What did Netflix tell us today? That the 200 might not be a support level. This area might not be a support level. The Candlesticks not yet in the oversold area. There might be some more downside on this one. Tesla. Looks like it could head for the 200-day moving average. And NVIDIA. Obviously did not support at the 200. All right. That's just the ones we look at. Oh, I didn't scroll down. Yes. Billy is down another couple points after hours. So would Trip and Twitter qualify for? Yeah, you'd probably, it wouldn't be the best place. Obviously up here was better, but at least you could probably factor that it was coming back down here to the 50 before seeing support. That one's just starting. That one would be much more relevant because it's not already sold off. So this one I would be more apt to short had it opened if it opens lower tomorrow. Can you screen for those short setups? Yes. And essentially you can start by doing that by looking for stocks in the overbought condition that have the biggest percent price move to the downside, just like we would for buy signals, looking for stocks in the oversold condition with the biggest percent moves to the upside. And we're also looking for things that might be accentuating the downside, like failure, resistance level, close below the T line. What was the other one that had kind of a EQ? Barry Sharami, gap down. If you see sell signals and gapping down, especially gapping down through the T line, that's even more powerful indication that the sellers have taken control. This one, Hydra. There's your Morningstar signal with your best friend gap up on this side, breaking this downtrend. So that's a good possible buy tomorrow. So we're starting to see some activity. So for those that want to go after something that's going to be a little bit more active, you can see what's happening in GameStop. You can see what's happening in AMC. You can see what's happening in costs. All these are starting to get some buying, and it's probably not because of any fundamental reason. It's because you're seeing a lot more, or seeing the short squeeze people jumping back in. Pitney Bowes. Probably not a very exciting company, but something's happening where you can see hammer off the 50, gap up, breakout. That becomes a very high probability trade setup. Again, this was part of our training this weekend. Anything you can see where you can add multiple reasons why people might be buying. AMC and GME. So the Reddit YouTubers were right? No, Jay, they may not be right. They may be the ones making those signals or patterns. So it's not a case of whether they were right or not. It's a case of, is that stock price going up or down? So look what we've got here. Self-fulfilling, yes. Got kind of a bullish flutter kicker right off the 50-day moving average. Kind of a doji sandwich breakout. That's just a lot of evidence that this one, AAPA, Advanced Auto, is heading higher. Now, for a little bit today, EXPR, whoops, it did close near the top end of the range. But this is that same scenario. Look at your doji sitting right on the 50, popping it back up. Where do you think the first likely target is? Probably right there to fill that gap. And then who knows if they're going to run it from there. At least it allows you to be in a profitable trade if you go after it after a strong breakout situation. Bingo was looking better had it closed up here near the top end of the range. We'll still keep an eye on it to see if it can get back up through the T-line. This was a kicker type signal. Unfortunately, it came back down into the trading range. This is ITI, so it's got a kicker type signal. You could still keep an eye on this one to see if there's going to be further buying. So that kicker signal is relevant. Anytime you see a kicker signal, you want to give it probably your first full attention. You can see what happened here on Deere with the kicker signal. Now look what you got going on. Morningstar signal, J-hook pattern, doji. If this opens positive tomorrow, what can you add up on that analysis? You've got a McMuffin and confirming a J-hook pattern after a kicker signal. Oracle, same scenario. Look at your kicker signal. Remember, a kicker signal doesn't require being in the correct place of a stochastic. A kicker signal is so strong that no matter where it occurs, it's going to usually produce more upside. Cisco, yes, also had a good kicker signal the other day or on Friday. So the probabilities of more upside on a kicker signal, especially when they open positive, is extremely strong. Now, you do want to have it open positive because there are times where if it opens, just like any other, if you hadn't bought here, and you're saying, I'm going to buy Amcx because of the kicker signal, so I want to see strength today, well, this one didn't do anything. However, it still has a kicker signal. So if it showed that they were coming back up through today's open, Friday's close, that tells me the profit taking's over, the kicker signal's still working. Let's see. Yes. Remember, the kicker signal is a very powerful signal. It may continue right on up with the T-line falling behind. Okay, so we had Pitney Bowes on a nice bullish pattern. The doji gap up. We have Dix. Again, add everything up. There's your hammer, harami, off the 50, gap up through the T-line, breaking out through this level. Dick's Sporting Good, strong chart. Walgreens, observe the obvious. Where were they thinking about buying? Right smack dab on the 50. So what do you got going on here? A Morningstar signal right on the 50. Stochastics coming up out of the oversold area. If they open this positive, what's it telling you? Telling you they're confirming the Morningstar signal and telling you this downtrend is being breached. More than likely, you're going to have more upside. Fry pan bottoms. This is Sunoco. Big fry pan bottom. Where did it break out? Right there at the breakout level. What's that imply? There's going to be more upside. That's probably right. That some of the consumers are now, if they've held their head up above water by trading on the internet or selling on the internet and keeping their revenues going, that when they open up, that's going to add more to them. There's another Morningstar signal. This is on our PEI, a Pennsylvania REIT. Another one that if they confirm it, telling you the Morningstar signal right here at the 50 and the T line, breaking this downtrend, has more upside. Oh, there's another fry pan bottom on Haynes brand. Another good chart setup. The airlines, probably benefiting from the stimulus package. Alaska Air, long-legged doji, best friend gap up through this level. What type of pattern? There's your J-hook pattern setting up. Save, same scenario. Long hammer signal, breaking this downtrend, uptrend starting. Spring break, all right, I didn't even thought of spring break. Southwest Airlines. Same scenario. Long-legged hammer, gap up. BGS, this one you can get ready to buy. Look at your scoop type pattern. Also calculate where do most people sell. They panic sell at the bottom. Look where the doji occurred, right smack dab on the 200. If this opens positive, what do you got going for it? Kind of a scoop pattern, breaking out through this level. Look for a slingshot effect to the upside. BGR, bullish Harami, bullish confirmation. This breaks this downtrend, wave 1, wave 2, going into wave 3. Where is the scoop on BGS? You can see kind of the flat handle, gap down, and now you got kind of a little scoop pattern right here. Jets, Morningstar type signal with a long-legged doji. Same thing. Good setup. Who's handwriting that? J-hook pattern in SeaWorld. J-hook pattern in Egna. Makes this very simple. There's kind of your doji sandwich. There's your doji. If this opens positive, what do you got going on again? A second doji sandwich. What's that tell you about your resistance level? It's not there. You're probably going into wave 3. Okay, I'll try to get through some of these real quick. AKAM, if this opens positive, what type of signal do you have? Your McMuffin with a morning or an evening inverted hammer signal. Where's your next likely target? Probably back up here to the moving averages. Oh, Tenga is up another $3 after hours. Okay, where was it in the first place? All right, so it's up here somewhere. All right. Jan, another bullish Harami right smack dab off the 50. That's got good possibilities. Again, with the added prospects that it's bouncing off the 50. Morningstar signal right off the 50 on HIB. ACHV, Morningstar signal. That one can be bought on positive trading tomorrow. High probability of a wave 3. And where do they, when they break out, where do they move back to? Right back to a support level. So what type of signal do we have here? I'll just speed things along. Here's your Morningstar signal followed by a doji sandwich. High probability you're heading higher. Yes, a McMuffin. An EBIX, kind of a cradle pattern. Look how flat your indecisive trading was. Now a hammer, bullish candle. You could be buying this one on positive trading. Remember, if one doji means indecision, a series of dojis means more indecision. The cradle pattern is usually a very high probability trade setup. And Kato, there's your scoop type Morningstar signal. Now, this is your trajectory. It's not unusual after a scoop type pattern that your trajectory goes like this versus like this. On watch. Oops, was a little bit stronger earlier with a bullish signal. The other two we already identified. If this opens stronger tomorrow, now this one's on watch for both directions. Good bullish trade if it trades positive, a good short trade if it trades lower. All right, so with this market divergence, making very good profits both long and short. And I wouldn't be surprised that at some point they start pulling the plug and everybody starts selling off just like crazy. That's where you start getting ready to take profits on your short positions. Okay, so do we have any general questions on candlesticks? Oh, I want to mark your calendars. If you haven't taken the 2-day basic training, shouldn't call it a basic training, I guess you, the 2-day training is where you, if you're learning bits and pieces of things and trying to remember them, comprehensive, there you go, thank you. The 2-day training takes you from start to finish, starting with the 12 major signals, all the indicators that confirm, the patterns that work extremely well, your entry and exit strategies, your stop loss strategies, your scanning techniques. This takes you from start to finish. Now, what that does is instead of coming to sessions where you keep learning a little bit all the time and trying to remember it or trying to have it sink in your head, after you do a 2-day training session, everything after that now becomes confirming of what you already know. What is basic training? That's starting from A to Z. We start with a doji. We go through the 12 major signals, go through the 6 or 8 patterns, go through the high rank signals and patterns, the ones that even improve, and then everything else. Entry, exit, stop losses, when to take profits, how to scan for the best trades. After 2 days, now you've got at least the perception of what moves prices, and everything that we do after that is just going to kind of add to that learning process. Do you feel comfortable buying a pattern without a signal? Let's put it this way. All right, when we do our scans, more than likely on any given day, whether the market was absolutely flat or heading down or heading up, you're going to have 6, 10, 12, 15, 20, 30 good chart patterns and signals. So it's not a process of saying, well, here's a pattern that's setting up. Doesn't really have a signal, but it's got a pattern. And more than likely, you're going to be seeing 2 or 3 or 4 or 5 that not only are setting up a good pattern, but have the signals with them. So I don't feel uncomfortable, just that the probabilities of finding something better is going to be that much greater. On March 27th and 28th will be the 2-day training. I'll be working on my sling trade from Trade Trend. I don't know what that means, but okay. Let's see, what did I skip up here? Bull and bear haramis. Does the entire candle have to be within the prior candle or just the body? Has to be within the prior body. So here's a perfect illustration. Had this closed right here, that would have been a reversal signal. The fact that it closed up here was not a signal. And the reason we know it's not a signal and has a significant is if the Japanese rice traders have had hundreds of years to identify what happens in human nature, if this was some sort of signal, we would know about it. But they don't have anything that tells us this is a signal. So the assumption has to be this may just be an up day, not a reversal signal. Will we get invite for? Oh yeah, we'll have all the stuff for yeah, for signing up for the 2-day training. Or it's, what is today? 8. Oh, it's still, what is today? 8. So it's still 1, 2, 3 weeks away. So you'll get lots of information between now and then. Do wedges and triangles or trend channels work well with signals? Yes, they work better with signals because you can see exactly when the signals are telling you there's a breakout or whether there's a support and resistance of the a channel. Which reversal signals only works in oversold or overbought? Oh, AL. That's, you shouldn't even be asking that question. How long have you been in the chat room? The first homework anybody should do is learn the 12 major signals. That's your bread and butter. That's what instigates all the other analysis of patterns, top rank signals and patterns. You've got 6 longs and 6 shorts. And obviously a bullish signal in the overbought condition doesn't mean anything. You want to be learning the bullish signals in the oversold area, the sell signals in the overbought area. Do you have a theory of why more people don't use candlesticks? Same theory as why more people don't use Elliott wave, Bollinger Bands, trend channels, anything you can think of. Everybody is being inundated with what they think or being told is a good trading strategy. Candlesticks fits in that same category. And that was always my rhetorical question when I was first learning candlesticks, when the chat rooms on the internet were just starting, which were nothing more than kind of high school food fights. But I would rhetorically ask people, why isn't everybody using candlesticks? They make so much sense. And the answers were, there's too many of them, and they don't always work. We always came back to the conclusion that, yeah, out of the 50 or 60 signals, there's only 12 that are ones that you want to learn. And if they didn't work, we wouldn't be looking at them hundreds of years later. So it wasn't a factor of that they didn't work. It was a factor of you needed to learn how to use them correctly. So if I understand it correctly, even if a candle crosses and closes above the T line, it's not valid if not preceded by a signal. Mike, yes, that's the whole point. You're going to see things close above the T line, but if it doesn't have a signal, it's probably not as relevant as if you see a candlestick signal and a close above the T line. How do you learn 12 signals? They're in the book. Yeah, I guess that would be the best place. And buy the High Profit Candlestick Patterns book. That concentrates on the 12 major signals. Yes, there are people teaching candlesticks apparently that don't really know how to use them effectively. Posers, that's right. High Profit Candlestick Patterns. It's the green book. That was the second book. The first book was published by Wiley & Sons. It was a profitable candlestick trading. So my suggestion is you buy High Profit Candlestick Patterns first. You probably want to buy them off the website because they're twice as expensive on Amazon. They charge full price on Amazon. Then you want to use Candlestick Trading, Eliminating Emotions. That's the third book. Then if you want to get more of a filler in, you can buy the first book, Profitable Candlestick Trading, Wiley & Sons. They're all on the our website. Which book has more details on where to put stop losses? Probably High Profit Candlestick Patterns, and there are we've got videos on the site for that if you want to concentrate on one aspect. The videos are relatively inexpensive and more inexpensive for members. Okay. All right, I guess with that, Jim, let's go ahead and do the double line. And in 3.2 seconds, do the next double line. This one, that's your kind of your double doji setup. Strong move, indecisive consolidation. Positive trading told you they were taking it higher. Best friend, more upside. Probably, yes. And rocket, Here's a very strong statistical probability. If you have a big, huge move like this, something good should be happening. It means it should trade flat or open a little bit lower and start trading up. If it gaps down and starts trading down, close it out immediately. You can always buy it back when it comes up here. Until then, you have nothing. Maybe a morning star. Nothing yet because you're not in the oversold area. Yeah, you're just kind of speculating that maybe it could be setting up. I probably wouldn't be paying attention to this one for a while. SSL, you just stay long. Wisdom tree. Nothing wildly exciting. You could stay long. See, this right here is not a signal. It's not a kicker signal. It's not a Harami. It's just an up day. So it tells you might have more upside. It's just probably not going to be as powerful as if it were a candlestick signal. That one you can get ready to buy. ENDP, you can buy this one on positive trading. Your hammer, your doji, your little gap up. So if it opens positive, what's it telling you? It's confirming the reversal signal and telling you the T-line's not acting as resistance. And Marriott, another one that's got a J-hook pattern in progress. You could be buying this one. Morningstar signal on yes. On yes. On this, yes, you can be buying on positive trading. That's a good Morningstar signal. Closed above the T-line, closed right at the 34. If it opens positive, it's telling these moving averages aren't acting as resistance, telling you this downtrend's not acting as resistance, and where did it bottom out? Right about the same level it bottomed or supported over here. Amcx, nothing there yet, Tim. I wouldn't, yeah, there's nothing there right now. Marriott, you could be buying this one. You just need to see more confirmation. And INMD, you stay short. INMB, thought I could swing right into that. You stay short. There's your blue eyes failure, making probably the 200-day your likely target. Oops, I didn't read far enough, Gary. Is IMD just a bearish McMuffin? Not quite, but we don't call it a bearish McMuffin. We call it an evening sandwich, which is your Dagwood. Another clever term. Riot, you stay short. Myra, stay short. Costco, you stay short. This one would have been a nervous one today, but if you've stayed short, and what to do with the calls on this one, I've got some spreads that aren't going to do very well, but I started buying calls here on yesterday with the anticipation they could be starting back up. Viacom, yeah, you've got to be careful now. Where do most people buy? They start buying exuberantly at the top. So keep an eye on this one. Get ready to start taking profits if you see anything that looks like it's starting to form a sell signal. If you're short on trade desk, you just stay short. However, if they open this positive again, I would start covering short positions. GOED, a morning star signal. Wouldn't be buying this one yet until it gets back up above the T line. But you do have a morning star signal right here at the 50. FANG, another energy company that you would stay long. Not quite, it's not quite a sell signal at all. But you just, if I was long this one, I'd just put a safety stop at today's low. It shouldn't come back down through that level. Go, you can get ready to buy this one. Morning star signal, close above the T-line in the 50, exactly what you would suspect, making likely this the next target. And Boeing, nothing to get excited about at all on this chart. That's just a very, very slow moving. I would probably have my money someplace else. Zoom, look at your big bearish engulfing. The bigger the signal, the more compelling that the investor sentiment is gone in that direction. Right now, all you can do here is stay short. Yes, you're in the members area. You're discounted. BABA, you just stay short. Billy, you just stay short. Beyond Meat, you can stay short, but this is a little bit more. You definitely need to see this open lower and trade lower to stay short. Otherwise, you got a lot of dojis here in the oversold area. Even though it failed here at the T line, it's telling you there's indecision here. So to stay short, you definitely need to see more selling occurring. When do you put a safety stop below the T line? And when do you wait for a close below the T line to get out? If you're, let's say this one closed like this, and it opened positive the next day and hovered here, or even started trading positive, then you can put your stop below the T line. As logic says, if they trade it up and then they come back down through, this signal is confirming. Now, on the other hand, let me see if there is another hand here. If you're trading something that's just kind of hovering the T line, not too far away, but you're in the oversold area, yeah, you want to see it close above the T line. There's kind of your belt hold bullish engulfing signal. You're right here at kind of a breakout area. You could still be buying this one. You could think about buying this one. If I was buying this one on positive trading tomorrow, I'd just make sure it doesn't close back below the T line. Adrian, why would you consider going long if there isn't anything showing any buying coming into this market? Now, obviously over here in the NASDAQ, there's no buying. So definitely want to be short. But there are, as you've seen tonight, there are a good couple dozen stocks that are showing buy signals. However, If the analysis is that the market is not acting very well, any buy signals or any buying of bullish trades should have very compelling buy signals if the market's not showing a lot of upside. Now, even though the Dow is up 300 points today, it's still not a very convincing, not convincing that the bulls are in control or have a lot of strength. Tripify, that one I'd be more apt to go short because it hasn't started a major downtrend. You got your left-right combo, got your hanging man. Now you got to close below the T line. At least figure it's just starting the downtrend. AUY, nothing there to get excited about. You have buy signals, but as soon as it's hit the T line, you got a lot of indecision. I probably wouldn't be long or short this one right now. Not until you see something convincing taking it out into away from the T line. DMNK, that's a good looking chart. Got kind of a bullish engulfing after a series of dojis. Oh, now if I can remember, somebody was asking today, what happens when you see a chart like this? I forget where the belt hold was on something, but it was doing this. So what it's doing is telling you it hasn't confirmed yet. Now it's confirmed. But there's a chart out there, I can't remember which one it was, that looks just like this day, and this day. So you could be buying this one on positive trading tomorrow. I think we did Cato. Nice morning star signal. And the retail, that's a good looking chart. Oh boy, I can't remember. I bought probably the monthlies. And I think I bought the 45s. So there would be March 45s. We did FANG. If you're long, put your safety stop at today's low. NIO just hasn't gotten started. If you're short, stay short with a logical target being the 200-day moving average. XPEV, you stay short until you see a buy signal. OPGN, this one, check to see what the news was that caused this breakout. You do have a best friend gap up through the T line, through the 50, through the 200. If it opens positive, you can start buying. If it opens positive and starts trading positive, then you put your stop at today's open. It shouldn't come back down through that level. OPTT, nothing here until they can get up above the T line. Beyond Meat, forming a bearish flag. Not really. No, I don't see that. To see that it's in a downtrend. GM, nothing wildly exciting, but it's staying above the T line right now after supporting on the 34. You could be buying this one. Ford, same scenario. Both of them have good charts, and those would be type of things that they wouldn't be traders, but they'd be something that you would probably stick in your longer term accounts. GM, is that a kicker signal on GM? No. No. This is a kicker signal. Very easy to identify. It opens here, closes here. Let's make this big so see it. The next day they gap it up. Now you want to see them gap it up and go the opposite direction. That's a trend kicker signal because it's in the trend. This is a kicker signal reversal. But you have a big down candle. The next day they open it and go positive, a big candle. You can see how the investor sentiment has been kicked in the opposite direction. AMC, DJ, we did this a couple of times. Breaking the wedge downtrend. You could buy this one on positive trading, which would mean the short squeeze people are probably jumping back in. An ITB, kind of a nothing chart. It doesn't have a reversal signal, so all you really have here is, yes, there isn't really a reversal signal. Now, it's an ETF, so I wouldn't buy the ETF, but at least it's telling me the home construction stocks. That's why we recommended them in the stocks to watch on Sunday. That you've got a lot of stocks, hope this doesn't make me a liar, that we're doing buy signals and trading positive. Uh-oh. Mass, Meg, that's kind of a junky chart. It doesn't really have any major direction. Even though it's got a Morningstar signal, it just doesn't have enough there that even if it does start moving, that it's any great, going to be any percentage or great percentage move. POW, if you're short, you stay short. Oh, cover the short. JB, is there anything there yet to tell you to cover the short? If the down bar and up bar of a kicker signal both are below the T line, does that lessen the effect by a lot? No. Remember, a kicker signal is so strong, you don't worry about stochastics, you don't worry about moving averages. It's telling you there's a drastic change of investor sentiment. So it doesn't matter where you are. This tells you there's a drastic change of investor sentiment. And Oracle was the same scenario twice. You weren't in the oversold area, but they gapped up through the T line, and they gapped it up again. That's kind of your bullish doji sandwich, J-hook pattern. You could be buying this one. And Kroger, kind of a scoop type pattern off the 50. That didn't do a whole lot today. It won't do a whole lot. But POOW. No. Oh, bounced off the 50 or the 50 area. But did it confirm any buying? Obviously not. It never got up above the T line. For all you know, this is ready to head down here. Okay, major difference, except I would be very apprehensive about any great strength because we don't have any strong buy signals. We may not have any great sell signals, but there's probably not going to be a whole lot of strength in the Dow, and we're already seeing the fact that the NASDAQ continues its downtrend with kind of a J-hook pattern that if wave 1, wave 3 could take you down here, which probably gets you close enough to the 200, they will eventually be taking it in that area. Is Dow making a scoop? Not really. Yeah, I wouldn't. Yeah, I wouldn't really call it a scoop. Okay, everybody. Oops, kept you way past your bedtime again. Yes, the NASDAQ needs something dramatic. And so what is the dramatic? Everybody was waiting for the stimulus package. Now it's been passed. It's not as vibrant as everybody was hoping. That now there might be the fears of inflation. So got to kind of gauge what investor sentiment is. And if the stimulus package was what everybody was waiting for to move things, now what is there to look forward to? So this might be buy the rumors, sell the news type thing. All right, everybody, we will see you bright and early tomorrow morning. We'll see you then.